How do you view the latest announced reforms for ownership, foreign ownership? Let's take, for example, the financial sector, because that's what we're here for. Is it more empty promises, or is this a big bang?
I think this is a major step in China's opening up and globalization of the financial industry. So I don't believe this is empty promises. As a matter of fact, these measures are extremely concrete.
Is it going to be a quick land grab, do you think, by the foreign banks coming in here? We've already had the announcement that UBS is going to be one of the first ones to try to, get the 51-49 joint venture. But is it going to be a real rush, or is it going to be a slow process?
Well, it is going to be a gradual process. As you know, in China, things don't happen immediately. But if you look out to the next 5 years to 10 years, I think the Chinese financial landscape will be completely transformed.
What's the risk that this recent trade tension between China and the United States could derail some of this openness and the reforms, that China perhaps could use market access as a retaliation for those countries, we'll assume that's the United States, retaliation for acting protectionist? Is that a possibility? Is that a risk?
So China has been pursuing a policy of opening up actually in the last 40 years. The purpose is not to appease any foreign trading partner. The purpose actually is to enhance China's own economic competitiveness. So that's why I don't think China will stop opening up the market just because the U.S. and China are experiencing some trade friction.
Do you expect a trade war to emerge?
We don't expect a trade war to actually happen. However, we do expect trade friction to continue. And this is going to be one of the most important issues facing the global economy. It is also a major risk. So at this juncture, if you look at the global economy, it is actually growing in a healthy way. The U.S. economy, the Eurozone, Japan, and China are actually experiencing synchronized growth. However, if trade friction escalates, that could put a damper on the exporting industries. And remember, China is not just one market. China actually aggregates a lot of the trade surpluses from the rest of the world, right? There's a major supply chain in the technology sector, in the automotive sector. So therefore, if the U.S. side ends up imposing the tariffs and sanctions on Chinese exports, it is going to affect not just Chinese industries, it is actually going to affect the global supply chain.
Now, we have another milestone date, June 1st. MSCI will include some A shares in the emerging markets index. How do you expect this to impact flows?
This is an important first step. We estimate in the coming several months, this weighting will increase. And in the coming several years, MSCI will increase more A shares into its global index. Also, other Chinese companies listed outside of China will be included as well. So therefore, global institutions are looking at the Chinese market because passive investors have to invest in A shares now.
Right.
But active investors are seeking to invest in A shares actually prior to the inclusion. Throughout last year, since the announcement was made in June 2017, many global institutions have been deploying cash to China. They're also building up their research capabilities on China A shares. They're doing more research on the ground here in China. So I think this is a major step. It's highly positive for the Chinese A share market